Used car prices shocked America earlier in the decade. Vehicles that normally depreciated began appreciating. Some used models sold for nearly the same price as brand new ones. Inventory dried up. Buyers paid whatever they had to just to secure reliable transportation. In 2027, the panic phase will be over. Dealer lots are fuller. Auction prices have stabilized. Discounts are appearing in certain segments. But here's the real question. Are used car prices finally affordable again? Or are buyers still overpaying, just in a calmer market? In this video, we break down where the U.S. used car market stands in 2027, what has corrected, what hasn't, and how to make a smart buying decision in today's environment. Let's take a closer look. To understand 2027, we need to understand what caused the spike. Between 2020 and 2023, the U.S. auto market experienced severe supply chain disruptions. Semiconductor shortages reduced new car production. Fewer new cars meant fewer trade-ins. Rental fleets held onto vehicles longer. Auction supply shrank dramatically. At the same time, consumer demand remained strong. People still needed transportation for work, travel, and daily life. The result was simple economics: limited supply, strong demand. Used car prices surged. For the first time in modern automotive history, used vehicles appreciated instead of depreciating. 3-year-old SUVs sold at record highs. Pickup trucks commanded premium resale values. Even high-mileage sedans held unusually strong pricing. It wasn't sustainable. And eventually, correction began. Fast forward to 2027. The extreme volatility has faded. Wholesale auction values have normalized compared to their peak. Depreciation patterns are returning closer to traditional cycles. Vehicles are losing value again in predictable ways. However, prices have cooled, not collapsed. In many segments, used vehicle prices remain higher than pre-pandemic averages. The correction removed the artificial inflation spike, but it did not reset the market to 2018 pricing levels. One key reason is simple. New cars are still expensive. When new vehicle prices remain elevated, used vehicles anchor at higher price floors. Buyers compare options. If a new SUV costs $45,000, a 3-year-old version priced at $32,000 may still feel reasonable, even if that number would have seemed high years ago. So while 2027 feels more stable, affordability is still relative. The used car market in 2027 shows noticeable variation across segments. Full-size trucks continue to hold strong resale value. These vehicles remain in high demand across the U.S., especially in suburban and rural markets. Supply has improved, but pricing power remains relatively firm. Mid-size SUVs also retain strong value. Family-focused vehicles with reliable reputations and practical design continue to attract steady demand. Hybrid vehicles are particularly resilient. Buyers looking for fuel savings without fully committing to electric vehicles often gravitate toward hybrids. This sustained demand supports resale stability. On the other hand, certain luxury sedans have softened more noticeably. These vehicles typically depreciate faster, even in stable markets. In 2027, their correction appears more pronounced. Some electric vehicles have also experienced sharper used price adjustments due to rapid technological improvements and increased competition from newer models. Older, high-mileage vehicles, especially those that were significantly overpriced during the spike, have corrected closer to historical value trends. The key takeaway is that the used car market is no longer moving as one single wave. It's segment-driven. Understanding which category you're shopping in matters more than ever. Inventory levels are one of the most important factors shaping the 2027 used market. During the peak shortage years, dealerships had very limited used inventory. Buyers had almost no leverage. Negotiation was minimal. Vehicles often sold quickly, sometimes above asking price. Today, inventory is healthier. Rental fleets have resumed normal rotation cycles. Trade-in volumes have improved as new vehicle supply stabilized. Auction flow has become more predictable. Dealer lots are fuller. This increases buyer choice. And when buyers have choice, pricing pressure softens. However, dealerships have also adjusted their strategies. Many dealers are pricing vehicles more carefully based on real-time market data. Advanced pricing algorithms monitor local competition closely. This means while prices may be more reasonable, deep discounts are not guaranteed. The market is more balanced, but not desperate. Financing plays a critical role in used car affordability in 2027. Interest rates remain elevated compared to the ultra-low rates of the late 2000s. Even if a used vehicle's purchase price has declined slightly, higher interest can offset savings over time. For example, a $2,000 price reduction may appear attractive. But if the loan rate is significantly higher, total interest paid across a multi-year term may reduce that advantage. Monthly payments remain a major concern for many buyers. Buyers with strong credit profiles are in a better position. They can secure more favorable financing terms and reduce overall ownership cost. Those with weaker credit may feel limited improvement despite price stabilization. In 2027, price alone does not determine affordability. Financing conditions matter just as much. Another important factor influencing used car pricing is depreciation stability. During the volatility period, depreciation patterns were distorted. Some vehicles barely lost value year over year. Now, depreciation curves are returning closer to traditional behavior. 3-year-old vehicles are losing value more predictably. 5-year-old vehicles are priced more consistently with mileage expectations. This predictability helps buyers. When depreciation stabilizes, it becomes easier to estimate long-term value. Buyers can plan ownership timelines more strategically. Resale forecasting becomes more realistic. That stability is a positive sign. So, is 2027 a good time to buy a used car? The answer depends on expectations. If you are waiting for a dramatic price crash, that scenario appears unlikely under current economic conditions. If you are looking for stability, improved negotiation leverage, and more rational pricing, 2027 offers a healthier environment than the peak shortage years. Inventory is stronger. Panic buying is gone. Artificial price inflation has eased, but prices are not returning to pre-2020 levels. Smart buying strategy matters more than timing alone. Focus on high-value segments. Compare local listings carefully. Monitor average days on lot. Vehicles sitting longer may present stronger negotiation opportunities. Check vehicle history thoroughly. Evaluate financing offers across multiple lenders. Preparation provides leverage. The biggest improvement in 2027 is clarity. The chaos phase has ended. Buyers no longer need to rush into purchases out of fear of disappearing inventory. Dealers are not consistently adding extreme markups. Auction markets are no longer setting record highs every month. Instead, the market feels measured. Used car prices are stabilizing, not collapsing. For informed buyers, that stability is valuable. It allows planning, it allows comparison, it allows rational decision-making. Before purchasing, evaluate your budget realistically. Consider total ownership cost, not just purchase price. Account for insurance, maintenance, fuel, and financing. In 2027, success in the used car market comes from information and preparation, not urgency. The environment is calmer, but smart decisions still matter.